Gold continued its upward journey today, has achieved 1985, the critical resistance level, which we have discussed in our multiple videos today and on the weekly reviews as well, that this is going to be a critical resistance. Yet it is still staying bullish. At the same time, crude oil again has gone to the main psychological level at $90 levels. It has gone close to 89.8, and right now it is very much staying at 89.6. What to expect from gold and crude oil with the US session, which position you should take in order to profit, we will see with the help of charts and indicators. First, we'll look into gold, followed with crude oil. Watch till the end. This is the second update for the day. Those who watched the first update must have profited and thus press the bell icon in order to get the notification for twice a day update. Also, you can also join my free Telegram channel to get the live market updates. The link is mentioned in the channel and video description. Let's start. And yes, if you appreciate the effort, do press the like button, do share, subscribe and comment. Now look at the hourly charts of gold here. You will find higher lows are getting created, higher highs are getting created here, and yet none of the candles have so far closed above the resistance at 1985. Why 1985 is the resistance, I'll show you with the help of daily charts later. But right now, if you look at what has happened for preceding few candles, you can consistently see higher lows are getting created, and this time in fact it has breached the highs. Thus on the hourly charts, what you can do, see, this is only applicable for few pips, that you can sell at 1982, but then expect, see, 1980, which was the resistance, is still going to remain a great support. So we have to wait for it to break past 1980 78 zone. Only and only if gold stays below 1978, further bearishness towards 1975 will be seen, which is going to remain 75 and 74 are going to remain a great support for them. Now, also, if you look at the hourly chart, the 20 period moving average is at 1975 and it is right now divergent. In the earlier update today, for the day, it is only and only if prices stays below 1972, you can expect that we are going to look at bearishness towards 1965. Yes, too much of divergence calls for it to converge, but right now it is not showing any signs of bearishness. It requires a strong trigger for it to continue on the downside. Yes, and if it stays below 1965, see, this is the zone where I would like to see gold again, which is going to be at 1950-45 levels. Chances appears to be less that it is going to move towards this zone today. Stochastic overbought. Now look at MACD. This is crossed over, trying to trade with slight divergence. And if you look at this crossover, is the second crossover in making, and see what has happened here. It has seen a drop, and this, if it continues on the downside, a little drop cannot be denied here. RSI consistently staying overbought, coming to 2. Likewise on the 2-hour charts, higher highs are done, and if it continues on the downside, higher lows. So yes, it is still staying in this bullish channel here. The bottom of this channel somewhere here at 78, and once it stays below 75 72, that is the time of reversal. We can look forward to 1965, 1960 and then 55 levels as well. Stochastic is overbought, MACD is divergent and bullish. It is trying to converge, it is not yet crossed over. RSI is staying overbought here. Coming to 3-hour chart. Now look at 3-hour charts here. See, higher lows, higher highs. This candle has just started. It has achieved higher highs here. Now trying to show a pullback. A pullback can bring it little down. 78 should be a great support. Below that only further bearishness should be seen. Now see, on the 3-hour charts, too much of divergence here. Remember, too much of divergence here from the moving average calls for it to converge. I will wait for it to break the strong support today at 72, below which further bearishness is going to be seen. Stochastic overbought, MACD is also bullish here, trying to converge. RSI is staying overbought here. Coming to 4-hour, similar is the observation on the 4-hour chart. See, look at this candle, then a swing, then a bullish candle, then a swing, then a bullish candle. Yes, the bullishness is getting diminished with each move here. This you should note. The bullishness is getting diminished with each move, and this candle is trying to show a pullback. Yes, it is still not bearish. Remember the fact, as long as for the day 1972.5 levels, 1972 levels are not breached, should not treat gold as bearish. Only below 1972 further bearishness, and then below that a sharper drop towards this zone some point of time today or next week can be expected. Now 1950 1945 is going to remain a great support. Stochastic overbought, MACD is divergent, MACD is bullish. It is trading at close to plus 20 levels, from minus 20 to plus 20, and if it falls from here, greater bearishness can be seen. RSI consistently staying overbought, calls for the pullback here, but right now it is not showing any signs. On the daily, if you look at the daily chart, see this is the third green candle here. Yes, the bullishness getting diminished. Yes, this candle could stay in green. That is one probability. It means it is not going to break below 1972. But yes, once it does, certainly see from 1972 to 1986, almost $14, and it can show a swing. If there is a news or something, it can show a sharp swing here, moving towards 1960 and then closing again. It can create a doji possibility exists that it can show a swing as well, but it has to stay above below the critical resistances. It has to break these critical resistances with force. Right now it is not showing any signs of a pullback as of now. The moving averages are crossing over here, and this is a bullish sign, and this is far below levels in 1910. Stochastic consistently overbought, MACD divergent and bullish, RSI is overbought. Thus, looking at this, I will recommend you to sell gold today at 1982. Remember, very nearby support levels. This is for few people taking a sell. That is a 1980-78 zone is going to give it a maximum support. Below 78, it is 75 and then 72. Very nearby, but very strong support levels. Cannot deny these levels. And below 1972 is where the bears will take over. Below that, you can expect 65. 63 and then 60 levels, then the next strong support zone, and then below that further bearishness may prevail towards 55 and below. Chances are less that it is going to drop towards those, as it is not showing any signs, and hence trade your trades on the upside. Buy at 1986, expect 1991 1990 levels to be seen there. Very strong resistance. Beyond that, it is directly going to land at 1998, if not today, possibly by next week. Staying above 1986-85 zone, certainly more bullishness is going to prevail. Trade accordingly. Now let's have a look at crude oil. And yes, if you want to learn this art of trading, you can join my mentorship batch. The 26th batch is started on 16th of October. 27th batch is going to start on 20th of November. Limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now look at crude oil on the hourly chart. See, this is the zone in which it is trying to trade. This is a sideways flag formation, and thus any breakout above 90, you should just initiate a buying position there and expect it to, rather I will say 89.8 itself you can buy. This price has to be above 89.8, and then you can expect 90.2, 90.8 and then 91.4 levels. Yes, these levels are achievable, and beyond that directly it will move towards 92.4, if not today, some point of time in next week. Yes, these levels are achievable. Look at this moving averages. Prices were divergent. It has waited for the moving average to come up. This suggests that still there is bullishness. There is no signs of bearishness as of now. On the downside, I will recommend you to sell here at 88.8, below which you can expect a further drop towards 88 levels. Yes, 88 is going to remain a great support. Stochastic flat near to top. MACD crossing over here, trying to trade with slight divergence in bearishness. This is coming at a slightly higher levels, but it does not mean that it cannot achieve further highs. RSI near to overbought, coming to 2-hour chart. Likewise on the 2-hour chart, see higher lows, higher highs, trying to stay in the zone. And see these candles are important where we have seen the swings here. So higher highs, lower lows in preceding 3 to 4 candles. Thus, in fact, I will recommend below 89.2, you can expect 88.8, 88.5 levels is a greater support, and below that further bearishness may take it till towards 88. Yes, it is trying to form a cusp, but right now what it is trying to do, it is trying to wait for the moving average to climb up and then consolidate there. Yes, it is still trying to stay bullish here. A breakout above 89.8 certainly should bring more bullishness towards 90.2, 90.6 zone. Stochastic rising, MACD is in green, trying to converge a bit. RSI is trading near to the overbought zone. Coming to 3-hour chart. Now on the 3-hour charts, look, this is important here. Double bottom at 88.8, and since then higher highs are achieved here. I think this is going to remain a great support. It is just trying to achieve higher highs and flat bottom. This is important. Below 88.8 is where the bears will take over, and then there is lot much of landscape on the downside to be covered by oil towards 88 levels, which is a great support here. Yes, one can sell here at 89.2, but then 88.8, 88.5 and 88 are 3 support levels. Stochastic looking down, MACD is still divergent, is still bullish. RSI is flat near to the overbought zone. Coming to 4-hour. Now look at 4-hour chart. See higher highs, lower lows, 88.8 to 89.8, almost a dollar move here in a single candle. This makes 89.3 is a good support, and then below that further bearishness. That is why I say below 89.2 you can initiate a sell for 88.8, and then 88.5. Below that 88 levels can be expected here. If you look at the movement on oil, you will always find rise, retracement, rise, retracement, rise, then possible retracement. Yes, the moving averages are coming up. Thus 88 levels cannot be denied if it stays bearish from here. Right now it is so far looking upwards, and then beyond 89.8 certainly the bulls might try to take over for 90.2, 90.8 levels. The stochastic overbought, MACD is divergent and bullish, RSI is also looking upwards. Coming to the daily charts, now see on the daily chart, this is important. If you just align the highs, $90 levels appears to be a great resistance. And if you look at the preceding candle, this was a major swing candle here from 85.5. Now if you connect these dots here, if 85.5 to 89.8, which makes the median at 87.6. Now 87.6 is the strongest support here on the downside. Any point of time, if you see oil staying below 87.6, treat this as a reversal and more bearishness may prevail here. Right now moving average is looking upwards, suggestive of bullishness. And if you look at the stochastic, this is overbought. MACD has crossed over here, trading with divergence. It can continue further on the upside, suggestive that see it has formed the tail and it can yield a bullish candle from here, taking it till towards 90.8, 91, and in fact further highs can be seen. RSI looking upwards, staying bullish. Considering this, if you want to buy, you can buy here at 89.8. That is a buying entry. Beyond that, we can look forward to 90.2, 90.8 levels as the next targets. Beyond that, 91.5 and 92.4 are two major resistances, and I will be watchful. If this week not, then if not, then possibly next week these levels will get achieved. On the downside, I will recommend you to sell here at 89.2 levels. Below that, 88.8 should not be breached. If it does break below 88.8, certainly more bearishness towards 88.5 and 88 levels to be seen. 88 and 87.6 is going to remain the greatest support. It was the resistance earlier. Now it is going to remain the support levels below which the bears will take over. Trade accordingly, trade profitably. Do like, share, subscribe, and comment. Do press the bell icon, join my mentorship batch and signals channel. And yes, you can press the bell icon, join my free Telegram channel to watch the weekly review. Do not miss this, and watch the twice a day update for both gold and crude oil. Thus, join the Telegram channel or press the bell icon. Thank you very much. Have a great profitable trading day ahead and a happy weekend. Thank you.